everyone, welcome back. My name is Isaiah Riel. Welcome to the next episode of Real Sense Retirement. This is the third part of a 5-part series of my show where I'm going over different areas of financial planning. And so as a recap, the first episode we went over retirement planning, 4 different questions to be asking ourselves. The second episode, previous episode, I went over investments, and I share with you my 4-step checklist that I use when I look to buy investments for my clients, for myself. And this episode, I'm going to go over estate planning. And estate planning is pretty important. And before I begin going over some things and tools that maybe you can use for yourself, I need to make this note. And the first is, I am not an estate attorney. I'm not an attorney. When it comes to estate planning, please consult an attorney. Please consult an estate attorney professional or professional in this field when it comes to looking to make adjustments or creating some type of estate plan for yourself. So I'm going to transition into this. I'm going to share with you in this episode different tools that you can use at your disposal to help yourself with estate planning. So what's the goal of estate planning? The goal of estate planning is 2 different things. The first is ensure that our assets are passed to your heirs, number 1, according to your wishes. And the second is this, in the most tax efficient way as possible. So how can we do that? Well, there's some tools that we can use to help us achieve that. So I'm going to share with you a few different tools that you can use to help get to where you want to go with your estate plan. The first is this. So what are the tools that we can use? The first is a will. A will, and this is according to investopedia.com,
is a legally enforceable declaration of how a person wants their property and assets distributed after death. In a will, a person can also recommend a guardian for their minor children and make provisions for any surviving pets. A will is an important component of estate planning. It ensures that the person's wishes are carried out and can make things easier for the heirs. And if an individual dies without a will, the distribution of their property is left up to the government and may even end up becoming state property.
The second is a trust. And a trust is this, according to investopedia.com.
In this example, I'm going to share with you a living trust. A living trust is a legal document or trust created during an individual's lifetime where a designated person, known as the trustee, is given responsibility for managing that individual's assets for the benefit of the eventual beneficiary. A living trust is designed to allow for the easy transfer of the trust creator or settler's assets while bypassing the often complex and expensive legal process of probate. Living trust agreements designate a trustee who holds legal possession of assets and property that flow into the trust.
So those are 2 different tools that we can use at our disposal to help us protect our monies for ourselves and make sure our assets get passed on to our heirs according to our wishes in the most tax efficient way as possible. Another tool that we can use at our disposal is a TOD, transfer on death. And this is why I suggest if you have an individual investment account for yourself, rename that account a transfer on death account. Because by doing that, you're adding beneficiaries to your plan. And by doing that, if we were to pass, again, knock on wood, but if we were to pass, those assets get passed on to our beneficiaries, no questions asked. They get passed on to them immediately according to your wishes. Some other things we can be doing is an irrevocable life insurance trust. What that is, and this is according to investopedia.com,
An irrevocable life insurance trust is created to own and control a term or permanent life insurance policy or policies while the insured is alive, as well as to manage and distribute the proceeds that are paid out upon the insured's death. An irrevocable life insurance trust can own both individual and second-to-die life insurance policies. Second-to-die policies insure 2 lives and pay a death benefit only upon the second death. Once established and funded, an irrevocable life insurance trust can serve many purposes, including to minimize estate taxes, avoid gift taxes, government benefits such as Social Security and Medicaid, asset protection, distributions, legacy planning, tax considerations, and more.
The other thing we can be doing is gifting assets to individuals. That's a tax efficient way to pass on assets to loved ones, to other people in a tax efficient way. those are some thoughts that we can be doing when it comes to estate planning, when it comes to tools that we can use to help ourselves with our estate plan, to pass on our assets to our heirs in the most efficient way possible and in the most tax efficient way possible. Again, lastly, note, the legal advice can only be provided by a licensed attorney. We work with you and your attorney to prepare and manage your estate plan. If you have any questions about estate planning, please feel free to give me a call, message me, email me. I'm here for you as a resource. This is the third of the 5-part installment about financial planning. I look forward to talking to you again. Next episode, we're going to be going over insurance planning. So make sure to stay tuned.